Which is the best dividend stock to buy? McDonald's stock or Starbucks stock? I'm going to answer that question in this video, comparing these two excellent dividend stocks across several financial metrics. So let's begin. I'm going to start with the dividend yield. Comparing McDonald's and Starbucks on this metric reveals a very similar dividend yield near 2%. 2.03% for McDonald's and 1.92% for Starbucks. So we can't get much differentiation here from these two dividend stocks looking solely at their dividend yield. So let's look at the next metric, which is revenue over the trailing 12 months. Now, McDonald's has been experiencing steady declines in its revenue over the last decade, falling from close to $28 billion down to $23 billion, while Starbucks has been growing revenues nicely from around $15 billion all the way up to $32.9 billion in its most recent trailing 12 months. I suspect this trend will continue where Starbucks will outgrow McDonald's because McDonald's is in so many locations worldwide already that it's got little room for expansion, while Starbucks is in so many locations in the US, but internationally it's got room for growth. And in fact, that's where Starbucks is focusing on its growth, is international segments. If you look at Starbucks new stores development, the majority of new stores that Starbucks is creating is in international segments outside of the US. That's where it's got room to expand. The next metric I wanted to compare these two dividend stocks on is their cash flow from operations to sales. This measures the percentage of sales that turns into cash flow. And for McDonald's, that's a robust 31.86%, much higher than Starbucks 12.52%. So McDonald's has the considerable advantage in this metric compared to Starbucks. The next metric I wanted to compare these two dividend stocks on is their operating profit margin over the trailing 12 months. And on this metric, again, McDonald's is significantly ahead of Starbucks at 44.62% compared to 13.67% for Starbucks. And the trend has been working in McDonald's favor, while Starbucks operating profit margin has been declining, and management expects pressure on its operating profit margin throughout 2023 as it has been forced to increase wages, and that's been pressuring Starbucks operating profit margin meaningfully here in 2022 and 2023. Finally, I wanted to look at the forward price to earnings ratio, in other words, the valuation for these two dividend stocks. And Starbucks is more expensive on this valuation metric, trading at a forward price to earnings of 26 compared to a forward price to earnings of 24.46 for McDonald's. So McDonald's is slightly less expensive than Starbucks. So when we look at overall, to summarize, McDonald's was growing slower than Starbucks. Starbucks is expanding much more quickly than McDonald's. However, McDonald's had a much better cash flow from operations margin and a much better operating profit margin compared to Starbucks. So if I had to pick one of these two dividend stocks to buy right now, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would pick Starbucks. I would pick Starbucks because of that expansion. That room for growth should lead to increasing margins and increasing cash flow from operations over time, while McDonald's might experience the reversal of that trend. While its margins are better than Starbucks right now, they could start to work downward as sales decrease and as it starts to deleverage on its fixed expense base. So for that reason, I would pick Starbucks as the best dividend stock to buy right now in this comparison. All right, that's all I've got for this video. Thank you so much for watching. There's a video that I've picked that I think you'll enjoy that's popping up on your screen right now. So please click that one and I'll see you over there.